The markets are going crazy as always with earnings reports well on their way here in the United States. Of course, this has impact whether you trade the indices, gold, commodities. Earnings report is a big deal. And also we had UK inflation come out hotter than expected. We'll be talking about that here in today's video. Again, the Dow, the S&P, the NASDAQ, all of them sold off here, with some reports from Netflix and Morgan Stanley, both of which were a bit disappointing in terms of guidance and performance, of course, causing some indices to move. Let's talk about that UK inflation and see how the pound pairs are moving today. So we've got our Forex factory pulled up here, and what you can see is that we got UK inflation numbers, or CPI, came out at 10.1%, still in the double digits here, as opposed to the forecasted 9.8% that was expected. Now, this, of course, is a big deal because if you're looking at inflation rates across economies, the UK is really falling behind in that regard. In fact, let's look at the UK compared to the US and Europe. Okay, so we're looking at inflation numbers here, and what's very, very interesting is it doesn't look like the EdgeFinder has actually, yes, it has. We had the March reporting here come in, and 10.1% coming out for the UK, a decline, but not nearly as much as expected. And here's the thing, when it comes to the inflation race, many of us remember, if you were trading last couple of years, the dollar was so red hot as inflation in the US, this blue line, went absolutely crazy, causing the Federal Reserve to raise rates at a record speed, going 500 basis points very, very quickly. Well, that seems to have started to squash inflation in the US. Europe followed closely behind and now is seeing inflation decline, whereas the UK has still really a big struggle with their inflation. They're not nearly as along in their curve in terms of squashing their inflation problem. Now, of course, this is going to have impacts on the pound. Let's take a look at pound USD here as we get into everything. Here is what's going on with the pound rallying on this news. And the question is why? Well, it's possibly because if we're looking at, again, GU, and we see a divergence where the central bank in the UK is probably going to have to continue to be hawkish, where we have a potentially on the cusp of dovish Federal Reserve here in the United States. There's a clear divergence in this pair that could actually cause more upward strength for the pound USD. Why is this? Well, because again, inflation is really hot in the UK. They may need to raise rates and keep them higher for longer than the US in order to squash their own inflation problem, especially with the energy crisis that we saw in 2022 with the invasion of Ukraine. It's been a really tough time for the UK. And again, in terms of the pound, why is the pound strengthening? Well, it's because, again, traders are expecting now potentially the Bank of England to need to raise rates and to continue to raise them. What do rates increase do? It causes the pound or the currency of that central bank to generally appreciate in most scenarios. So for those of you guys who are watching the pound USD, one notable spot here I would say is to see if we can get a break of the previous resistance point right around 1.2530. This is our previous high where we saw sellers pretty strong, but still in the context of a overall, what I would call pretty strong upward trend on the daily chart. Now, again, guys, we've seen, we took a look at that inflation number compared to the US. And during the 2022 run up, we saw the US inflation very, very high, but we saw the Federal Reserve start to raise rates at a rapid pace, which caused the pound to weaken tremendously. Now we're seeing the unfolding or the unwinding of that trade going back the other direction. And so for me right now, I think that the pound actually looks notably bullish, but not necessarily against the dollar. The dollar's economic strength is still there, and it's actually evident when we take a look at the pound USD. Why I'm not necessarily very bullish? Well, it's because we have a filter here on the EdgeFinder that checks for economic data. And right now, economic data in the US is still very, very strong. Comparing the GDP, we have a much stronger GDP growth, at least in the most recent reporting. Inflation is much more under control. Unemployment is at a healthier 3.5%, and interest rates are higher at the time of making this compared to the UK. So again, I think that in terms of trading the pound USD, I'm not super interested. However, I'll show you a pair that I am interested in. Let's take a look at pound yen, where pound yen, when we pull this one up, we have a bias to the upside. And what we can see here is when we look at data, when we talk about trade setups, we compare currencies, one economy against the next. And when we take a look at score, for example, we get a +5, gives us this buy rating. When we take a look at COT data, Pound is pretty mixed. However, the yen is very short biased. Institutionals, hedge funds, speculators on the large scale, they are short biased on the Japanese yen. And so that actually makes me want to be more bullish GBP, bearish JPY. If we take a look at retail, retail is also betting against the pound and in favor of the Japanese yen. So I tend to want to be fading retail, going against that. And then of course, in terms of the upward trend we've got on the GJ pair, we'll take a look at that in just a moment. And we also have economic numbers, which are a little bit mixed, but again, not super preferred one direction over the other. Inflation and unemployment favor Japan, whereas GDP growth and interest rates favor the UK. By the way, guys, what you're looking at is our software tool called the A1 EdgeFinder. Is that how I'm able to pull up all the data that I do on my streams, channel, all that stuff. If you want access to this, we are doing our 40% off once a year sale right now. If you want access to that, there's going to be a link down below in the description that takes you to a live chat feature directly to our website. This will connect you to one of my staff members who can get you access to the EdgeFinder for upwards of 40% off right now. If you're interested in that, if you want access to the EdgeFinder or access to our Discord group, click that link. It's at the top of the description. Click tell me about your discounts and you'll be connected with one of my staff members in case you're interested in getting access while the sale lasts. It is ending soon, so please do not miss that opportunity. If you've been thinking about getting it, this is the best price that you're going to get all year long. If you guys are not inside of the Discord, this is where I share all of my trades as well as go through EdgeFinder analysis like I do here on the channel, but you'll actually get notifications of when I take trades. I'll show you what that looks like in case you are interested in that. So you can see entries, exits, trades, why I'm taking them. I share full breakdowns. It's not a copy service. It's a service where I share my trading journal, essentially. So if that's something you think would be helpful to you to look along to as you go along in your trading, then feel free to join us. Click the link down below in the description, or you can have a direct message conversation with one of my staff members here at A1 Trading. So yeah, I do like GJ. So let's take a look now at the pound yen specifically, and we'll see what's going on with this chart. So in fact, I actually think the pound yen chart looks really, really good. It looks really strong here. We had a breakout on this news with CPI numbers coming out really hot. The pound yen was able to break through this previous high at 166.99. And again, I think that this is a clear pullback buy in my opinion. I like that 50% retracement for a possible continuation play on GJ. So I'll be watching this myself. Again, technical is very simple here. We have resistance that held for a little while, but then price was able to break out on this big run to the upside. So a pullback into that area, in my view, with the fundamental catalyst, actually looks like a really attractive opportunity to the long side. So that would be my take on the pound yen at this time. Now, I recently had a gold trade that did not work out, unfortunately. So my gold trade, I was trying to catch this bottom here, just along the trend line, looking for that trend to continue. Unfortunately, broke to the downside, has since come back a little bit. So I'm feeling a little bit discouraged on that, but it happens to the best of us. Sometimes you get stopped just at the worst time. But despite that, I am still watching the gold market, though I do not have as much of a bullish bias on it right now. Part of the reason for that is if we go take a look at retail sentiment, the crowd is sort of back to betting on the long side of the dollar of the gold market. It was not the case yesterday when I took this trade, or a couple days ago when I took this trade, but now retail is sort of betting in favor of the gold market. So that's a little bit of a red flag. Despite that though, if we start to trend back up, if we start seeing an impressive rally on gold, like breaks, retests, I won't mind looking to try and catch it on a break and retest kind of thing. But right now, this structure to the upside seems a little challenged, so I'm gonna just be hesitant and wait on the sidelines with that. The last thing I'll take a look at is another trade I'm very interested in is possibly catching the S&P on a dip. If we do get a move back down to like 41.25, something like that, I may be interested in trying again on my S&P 500 long that I had going into this week as well. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.